In terms of the numbers, Coinbase Q2 earnings came out. Total trading volume dropped from about 30% from the first quarter to the second quarter to about $217 billion during the period. And net revenue came in at $803 million, missing analyst expectations. Joining us now to discuss with more is Michael Safai. He's the managing partner at Dexterity Capital. Welcome, Michael, to the show. So hearing about Coinbase's earnings last night, what were some of your key takeaways?
Well, I don't think this surprised anybody, and it certainly didn't surprise us. We trade billions every day across major cryptocurrency exchanges, including Coinbase. And we've definitely seen in the past quarter, volumes have been low. And that's where Coinbase makes its money, off of fee revenue from volumes. Now, it's been a really unique period of time. We've seen some of the major pillars of crypto collapse over the past 3 months. And that actually drove up some volumes for a brief period in May. But generally, it's been a slump. So this really isn't a big surprise. And I think Coinbase is going to have to get smart about how are they going to make revenue numbers in the future.
So yes, you're right. It's absolutely not a surprise. But let's just look at Coinbase specifically here, because there's kind of two different. One is just the crypto winter, which is affecting everybody, and the other is just Coinbase's own revenue model and management style. So Coinbase has been criticized for a long time for relying too heavily on transaction fees, and not diversifying its revenue enough. They tried this like NFT marketplace, didn't really work. So I guess my question for you is, where did Coinbase specifically go wrong? Like where are some places where the company kind of maybe miscalculated that just is not have to do with the crypto winter specifically?
It's kind of funny, but I think maybe the thing they might have done differently is go public. These other exchanges that we talk about, like the Binances and the Krakens of the world, they've stayed under the radar. And this has been good for them in this crypto winter because they don't have all the problems of optics with being a public company. So everyone's talking about the problems Coinbase is having in the news, and this is going to negatively impact how retail users view the exchange, even though nothing's really changed there in terms of trading. So I think this is something that is unique to Coinbase being the public exchange, is that they're just subjected to a lot more scrutiny.
Is it that though? Because it might be that they are subjected to that public scrutiny, and the retail public might be a little spooked by Coinbase itself. But isn't it more the fact that you had these implosions of the Voyagers, of Celsius, at 3 Arrows Capital, and the average retail investor is looking at this and they're saying, I don't know if I want to play in this market. I mean, look, Coinbase's revenues was like over $600 million came from, in this past quarter, came from retail. And if that retail market is like spooked by the institutional market not having its stuff together, hasn't it just basically killed the retail enthusiasm for crypto for some time to come? Is it just Coinbase, or is it really the institutions who did this to everyone?
I think having lenders fall down was a big deal, and it sucks a lot of leverage and a lot of assets out of the ecosystem. So institutional traders who are not only spooked by these things happening also have less capital to trade. And so that means there's less activity on the exchanges, there's less exciting things happening. Retail users, they're spooked by the failures, but they're also kind of seeing less to do there. And so this is generally bad news. And I think when I talk about being public being a problem, I look specifically at Coinbase, who said they were going to significantly cut their marketing budget in their call yesterday. And this is a problem. Crypto exchanges are still new. It's still early days, and they need to spend a lot of money getting new users. Now, cutting your marketing budget, that's going to make that hard. The other exchanges who aren't public, well, we don't really know what they're doing, but I suspect they're spending a lot on marketing still.
Well, actually, I just want to push back on that for one moment, because one of the big criticisms of Coinbase was that they spent millions of dollars on this Super Bowl ad and then went to go and cut 18% of their workforce. Meanwhile, you have CZ at Binance doing a victory lap saying like, hey, we never spent any money on a Super Bowl ad, right? So I think, that just comes back to sort of like the miscalculation part, right? I mean, and I think your point about them going public is really interesting, but it does seem like, for example, did they really need that QR code at the Super Bowl? I mean, did they overspend when the market was on top? I mean, I think there are questions about, again, looking at Binance, they're cutting transaction fees. Why has Coinbase not been able to diversify? So I do think there's probably some other areas where, Coinbase might have made some different decisions that don't have to do with the crypto winter or going public specifically.
Yeah, I think that's fair. And I'm not a fan of Super Bowl commercials, although I do love the old pets.com one, but we saw where that got them. So it's not something that, wasteful spending doesn't make sense. But I think crypto exchanges do have a unique problem of user acquisition. the cost of acquisition is very high, and you'll constantly need to get new users. So it's always a tricky way to do things. And yeah, Super Bowl ads, not maybe the best thing, but hey, FTX did it too.
Hey, so Cathie Wood, not necessarily jumping into Coinbase anymore, kind of freaked out by a little bit of the regulatory concerns, I guess. What do you make of that? I mean, how should investors approach Coinbase's regulation issues?
Well, I think they're actually being smart, and part of it is because they're in the States, because they're highly regulated, and because they're public. So you saw, for example, they recently acquired FairX. Now, one of Coinbase's problems for a long time is they don't have any kind of derivatives products, and that's a really lucrative place to be in crypto. Many of these offshore exchanges, they do have them, and they're kind of in the gray area from a regulatory perspective. By acquiring FairX, Coinbase now has a legit, properly licensed futures platform that they've just started to roll out this past quarter. Now, it probably took them too long to get there. But that's going to be a big part of the game going forward. Crypto is moving towards regulation. This is a good thing. It inspires confidence in retail users. But to do that, you have to invest a lot. And they're doing that, to say the least.
Speaking of regulation, another elephant in the room for Coinbase is whether or not they're issuing unregistered securities. And Brian Armstrong, the CEO of Coinbase, did talk about communication with the SEC. Here's what he had to say.
So in May, the SEC sent us a voluntary request for information, including for information about our asset listings process. And we do not yet know if this inquiry will become a formal investigation. As with all regulators around the world, we're committed to productive discussion with the SEC around digital assets and securities regulation. And if this inquiry is an opportunity for that discussion, we welcome it.
Now, a former Coinbase employee is under investigation by the SEC and DOJ for insider trading, and in that case could be revealed whether or not there are other cryptocurrencies other than Bitcoin and Ether that could be unregistered securities. So I wonder what your thoughts are on where Coinbase stands and any regulatory challenges in the future from the SEC.
I think it's going to come down to how well they cooperate and how transparent they are. Regulators have really struggled with crypto. It's a borderless asset class that can be moved without AML, without KYC in a lot of different ways. And that's scary. So they do need to figure out a framework that's going to work for this new technology that's totally novel. So my hope is that Coinbase is going to be extraordinarily transparent and work with the SEC regulators to get to a good place. That doesn't rule out the potential of fines for sure, but my hope is they can work together and get a framework that makes sense and makes everybody safer.
Finally, there's some conflicting takes on Coinbase from different banks. Bank of America is saying Coinbase is well positioned to take market share during this crypto winter. JP Morgan, on the other hand, is less optimistic, saying Coinbase's near-term outlook is still grim. Where do you stand?
The fate of Coinbase is tied to the fate of crypto, very much so. It's a one-to-one correlation nearly. And we're even seeing that now with the latest inflation report causing a little pop in the BTC price. And similarly, pre-market trading doesn't look too bad for Coinbase after that report. So I think that's really what it comes down to. If crypto is going to see another bull run, that's going to be great for Coinbase. If it doesn't, they are going to have to be smart in how they spend. And they're going to have to make very good decisions over the next year or two, so long as this bear market lasts, to ensure they survive. And that's the mantra for a lot of the crypto industry right now. Survive, survive, survive. Get ready for the next run.